Abneesh Roy, Executive Director at Nuvama Institutional Equities, joins us now to talk about all that's been happening in the FMCG space. Abneesh, the first question is on the ITC acquisition. I know Yoga Bar is a relatively small acquisition, but the management believes that it's a 45,000 crore market size, this business. What are your thoughts?
Yes, thanks. Yes, it's a good acquisition. So what we are seeing is ITC is closing the white spaces. Yoga Bar will sit very nicely with the Ashirwad brand, which is the market leader in its space. And it will also add with the Sunfeast, which ITC has in the biscuit. So in the food space, ITC was not having a presence in the healthy food space. This will give them that presence. It's a small acquisition, but if you see in the last few years, it has doubled. Our view is in the next 3 years, it will have a very strong growth. We have seen that earlier in HUL's Indulekha scale up. In a few years, Indulekha sales became 6x for HUL. So my sense is 68 crores can be scaled up because of ITC's distribution, brand capability, much better understanding of the digitization. But this is a view we have been sharing for the last 4 quarters, that D2C business will be dominated by the listed FMCG players. 2 weeks back, we had seen HUL acquire 2 D2C companies in the same day. I think that's what will happen across the board. There is a winter funding dry up for the D2C. So yes, ITC good acquisition, but we will expect more such acquisition by most of the listed FMCG players in the coming quarters.
Abneesh, I was going to ask you about volume growth and earnings, etc., but I have to ask a follow-up to what you said. Any other eminently acquirable D2C brands right at the top of the list?
So difficult to comment on M&A, but I think 90% of the D2C in FMCG is available for grabs. I would expect 70% to shut shop in the next 2 years. I'll expect 25% to be acquired by the listed FMCG, and only 5% scaled up models will survive. I think Mamaearth is a good business. It has scaled up really well. But definitely most of the other small startups will face extremely tough times and they will get acquired. And FMCG companies acquire at the right time. So this is the right time. Valuations are favorable and they will learn from the D2C businesses also.
Okay, all right. Abneesh, hi, morning. Nigel on this side. You're sounding fairly optimistic on this ITC acquisition. One would have thought it is a little expensive, but as you're saying, scaling up is going to be good. So it looks like a good acquisition for ITC. What about the other couple of stocks? HUL, they come out with this set of numbers, had a good run yesterday. The street seems to be sniffing something. What are your expectations with these numbers?
Yeah, thanks, Nigel. So yes, definitely tomorrow 2 heavyweight results are there. For both companies, we expect sequential margin recovery to start, and Q4 further it will build. YOY margin pressure for HUL will still be there because of the higher priced inventory. We do expect for both companies, the growth rate of volume will be higher than industry. See, there are 3-4 key things. INR worst is behind in terms of the depreciation. Harsh winter will help HUL in Q4. We are also seeing WPI inflation at a 22-month low. It's good for Unilever and all other FMCG in terms of lower end consumption. So things are looking up in terms of outlook for both the companies.
Okay, and for Asian Paints particularly, the stock is actually down quite a bit, right? From its 52-week high, it's off about 20%. Do you see valuation headroom if Asian Paints delivers this quarter?
Absolutely. If there is no shock and we'll need to wait for the results tomorrow, I would say that in Q4, the outlook is far better. In Asian Paints, it's a high beta stock, so quarterly results do matter. October month demand was very weak for the industry because of the rains. So that's not a structural issue. Demand is improving, and definitely the gross margins, EBITDA margin in Q3, Q4 will be much better than the Q2. So yes, it's looking quite attractive in terms of valuations also.
In your coverage universe, Abneesh, what else is looking interesting? Because stocks, I don't know if you track Varun Beverages, but if you have a view, stocks been volatile.
Yes, we are positive on the name. Again, quarterly results for Varun Beverages is slightly more cyclical versus a HUL kind of business because it's a cold product. So whenever harsh winter happens, you will see those movements, etc. But definitely, Reliance entry here has to be watched because Reliance has acquired 2 companies here. So it's an interesting space. But yes, Varun Beverages still has huge headroom to expand market share. It has been seeing very good success in its new products. But in Q4, because of the harsh winter, at least in its cold beverage product, there will be risk and headwinds there. So you need to watch that. But yes, it is going to be one of the few companies where Reliance has to be watched very carefully.
Okay, well, I wanted your thoughts on Nykaa purely because, the stock is at an all-time low and there are rising concerns about what the long-term value in the stock could be. How does one approach it if there are still long-term investors here?
Yes, so here essentially 2-3 things are there. One, of course, the bonus issue, all those things happened, and then there has been share sale by the employees also. That's one concern. In general, we have seen the D2C valuations, e-commerce valuations cool off. But I think, again, Nykaa is a company which has really created an excellent business model. I'll have some apprehensions on the apparel side of the business, but in beauty and personal care, clearly extremely well-run companies. So those, the valuation comfort which has now come finally, I think that's very good. But definitely here, I will say that the overall D2C, what's happening in terms of the job losses, the gobbling up by the FMCG majors, that is still going to be an overhang on the stock in the near term. But yes, medium long term, this is a good stock to own.
All right, we will leave it at that. Thanks a lot for joining in. Have a great day. There was plenty of, stock talk. So let's keep it to that.